So for more on what's moving the markets right now, we want to bring in Mimi Duff. She is managing director and advisor at GenTrust's. And Mimi, what do you think? Yesterday, the concern was that we may not see a rate cut till the very end of this year, if at all. And the market is kind of rethinking what that might mean. How do you feel about it?
Yeah, I think if nothing else, we can see that things can change quickly. In the beginning of the year, we were priced for 6. Now here we are closing in on the middle of the year. And to your point, one hike, and it looks like December in terms of what's priced in. I think going forward, it does seem like we're going to be in a period of interest rate divergence between the U.S. Fed and some of the other central banks that are more further along the path of inflation fighting.
It sounds like, OK, that's a concern. Yesterday, we did see a big drop for all 3 of the major averages. But relative to what they've done for this year, the market has really taken this in stride. And I think part of that has to be because the earnings keep coming in and keep coming in impressively strong.
That's right. Earnings beats were very solid in this first quarter. And I agree entirely. The equity market has done its job well this year, despite having a bad day yesterday.
So what do you think kind of happens from here, especially when you get into the holiday season with a lot of people, the summer holiday season with a lot of people leaving and taking off for the beaches and elsewhere? Is this a situation where you expect more volatility, or are people feeling pretty comfortable with where the markets are?
We are, especially second half of the year as you're approaching the elections. We are looking for more volatility. We've taken some chips off the table on the equity side. We think fixed income will perform better in a range of outcomes. If we see more of the same, you should be able to earn the yield, and we think that those yields will be well supported. On the other side, if the economy deteriorates, we think they'll perform well, too. So we've taken some chips off the equity table to allocate into an overweight in fixed income.
So you've got a neutral stance when it comes to real assets, though?
Yeah, we're fairly neutral. I mean, look, I think that we're actually slightly underweight, but we continue to like uranium. That's traded very well over the past years. We don't have strong conviction in that sector is how I would frame it.
OK, what do you think in terms of a recession? Because this is getting kicked around, too. You think we head into a recession this year at all?
Well, we definitely over the coming year, I can't speak to 24 but over the coming year, we have higher than the market's percentage chance of entering recession. Given that so many consumers were able to refinance houses at very low interest rates, and on the credit side, very same situation, this rate cycle seems to be taking longer for these high interest rates to grip. So it's very difficult to time when the economy will slow, but we do have higher recession odds than the market is placing.